Hey guys, in today's video, I'm going to be highlighting financial mistakes that you're probably making in your 20s. And if you're in your 30s watching this, assuming you started making these mistakes in your 20s and you haven't corrected them or you haven't learned to do better, then it means you're still going to be making these mistakes in your 30s. This video is for you. If you've been struggling to make the right financial decisions, stay put and watch this video because I'm going to be pointing out all the things that I think that you're doing wrong. When it comes to do with your personal finances, you have to be deliberate about it. So I first made a video about how to build wealth as a 9-to-5 worker. So if you're a salaried worker, if you do 9 to 5. So I made a video recently about how to build wealth while working a 9 to 5. And the video received very good response. I got lots of questions. I recommended books that you should read. So I'm not going to share points that I already made in that video. So take it that this video is a continuation of how to manage your finances in order to arrive at a point where you're able to build wealth. But this video is like episode 1 and the other video was episode 2, because when you avoid all the mistakes I'm going to be sharing in this video, you can now start building wealth. Okay, you can now start accumulating wealth, because by the time you have the right information, you're taking the right steps, then you're going to be able to do what you need to do to build wealth. Okay, so in this video, whether you are working 9 to 5, you're an entrepreneur, you own a business, and you're trying to get better with managing your personal finances, then this video is for you. So I have a couple of points that I'm going to be sharing in this video. There is no one that has priority over the other, so I'm just going to be sharing as they come. The first financial mistake I think you're making in your 20s and probably in your 30s is ignoring budgeting and overspending. So assuming you earn £2,000 a month and you just at the end of the month, the 2,000 has finished, or even before the end of the month, you've run out of money. The question is, how are you spending it? Are you tracking the way you're spending your money? Are you budgeting? Say you earn £2,000 and your rent is £800 and your bills are maybe £200. At the end of the day, if you do not track and budget how to spend that money, then you're always going to end up living from hand to mouth, which is the rat race that I explained in the other video. So by the time you receive your salary, before your next paycheck comes, that salary has finished. And then you're asking yourself, what did I do with money? I only bought food. I only paid transportation. I only paid my rent. Now the money is gone. The thing is, you probably don't know what you did with the money because you didn't track your expenses and you did not budget. So when you are budgeting, you need to include your fixed cost, which is your rent, your bills, your telephone bills, and every expenses that is fixed. And you need to budget for your variable expenses. And I usually recommend that if you want to buy things that will cost you a certain amount of money, you should plan for it. For instance, if you want to buy something that's worth £200 or £300 at a time and you're earning £2,000, I would not recommend that you take out £300 to buy something in 1 month. So if you want to buy something of £300 or £400 or £500, it would be very advisable for you to start saving for it. Maybe every month you're saving £50 so that at the end of 3 months, you have the amount that you need to buy. That way, the load of spending on such an expensive item would be very low on you, because if you just remove a chunk of £300 to buy something, think about the effect that that's going to do for you. So for me, usually if I want to buy something, say I want to buy a camera for my content creation, I want to buy a phone, I want to buy a wristwatch, like buying your Apple Watch, things like that, that would take more than £200, or if you're watching me from Nigeria, things that will cost you a lot, maybe in hundreds of thousands, for something that will cost you like 200,000, 300,000, 400,000 naira at a time. It is not advisable for you to just take out that money from your salary to spend. You could budget for, save up for 3 months or 4 months so that you'll be able to get that money and, spend and buy what you have to buy without it affecting your monthly, expenses or monthly finance in a very significant way. So that's how I do it. So number one financial mistake that you're making as someone in your 20s or 30s, if you're still making this mistake, is not budgeting and, spending all the money in your paycheck. If you watch the earlier video that I made, I did say that when you're trying to budget, you decide how you want to do it. So it's either you put aside 50% for your fixed expenses, your rent, your transportation, your food, 30% for your wants, which is like leisure, holidays, gifting, charity, and all of that. And then you can put 20% to save and invest. So some people would increase or reduce the percentage depending on how much they earn, but you have to make a deliberate effort to plan and budget, because if you don't plan before the money comes, let me tell you, you cannot plan when the money is here. You have to plan before the money comes so that when the money comes, you already know where it goes. Currently, I have 3 bank accounts. One of them is my current account where I used to receive money. And then the other one is my spending account. Okay. That is where I transfer money for groceries into, money for bills and everything. And then the third account is my direct debit account. So all the bills I have to pay that is on direct debit goes to that account. So it means every time there's always money in that account, because if you set up a direct debit and you fail to pay, of course that's going to be affecting your credit score. I'm going to talk more about building your credit score much later. But yeah, so things like that, you have to be deliberate, because if you miss a payment on direct debit and it's a bill, payment that goes to the government or something, then you're going to be ruining your credit score, and you don't want to do that. So you have to be deliberate. You might say, oh, I don't have 3 bank accounts. You don't need to have 3 bank accounts. I use Monzo, and in Monzo, not just Monzo, a lot of other banks, they do it. You can create pots. You can create different pots. So if you check my Monzo, I probably have like 5 or 6 different pots here. Let me just quickly check that. So in my Monzo account, I have different pots. I have YouTube, I have leisure or eat out, I have clothing and shoes, I have groceries, I have subscriptions, I have skincare and makeup, I have salon and spa, and then I have gifting/charity. What happens? Why do I have all these pots? When I get my payment, I put a certain amount. I have the fixed amount that I need to put in each of these pots. And what happens is, when I'm spending throughout the month, I spend directly from a pot. If I'm going to the salon to make my hair or to make my nails, I'm going to spend from the salon or spa budget. And when it finishes, trust me, I'm not doing nothing again with salon or spa that month, because that budget has finished. So that helps me to stay on track, to ensure that I'm not spending so much above what I budgeted for. Okay. So for instance, if I put £100 for salon/spa, when I go there, I'm going to just spend £100. And maybe if it goes above, let's say 110 or 120, that's it. I know that for this month, nothing concerns me with salon and spa again. And I'm not going to follow my friends and do impromptu spa session, impromptu spa dates that I'll go and spend money that I don't have. So these are the ways that I ensure that I stay within my budget and I stay within my expense limit, because when I'm done separating all this money, I also have my savings. I also have my investments, which is direct debit. It goes directly from my salary account into my investment account. So I don't have to do too much about it. When you watch the earlier video, I talked about how to build wealth. You will be able to understand the references I'm making in this video. So if you haven't watched that video, please remember to go and watch it after you watch this one. So learn to budget, learn to spend below your means. So the fact that you earn £2,000 does not mean that you should spend £2,000 at the end of the month. It's you spending too much, and it's wrong. You have to spend below your means so that you can be able to save and invest. Another financial mistake you are making in your 20s is not building your credit score. Yes, I know I mentioned credit history earlier. So for instance, if you live in the UK, you can take credit for large purchases, credit to buy a house, credit to buy a car. You can take credit, right? And how are you able to access credit? You're able to access credit when credit facilities, when credit companies assess your credit worthiness. That means this person is reliable, this person is responsible financially, this person can manage money. I can loan this person money and this person will pay back at the right time. If you're in your 20s and all you do is apply for different credit cards all over the place, exceed your credit limit, spend and spend and spend because you have the credit, you think you can spend. It is your money that you're spending. So as you spend, you're going to pay back. So some people have the habit of getting different credit cards. When they max out this one, they don't pay back. They go max out another one until like that. You just keep maxing out. And maybe at the end of the month, you are just paying minimum deposit, minimum payments for your credit card. And then you just keep accumulating credits. You're ruining your credit history because at the end of the day, you will not be deemed to be reliable and trustworthy with money. So when you're applying for credit, there are two things that will happen. Is either you will not get that credit or you are going to be given credit with a very high interest rate. So in your 20s, you need to behave in a way that helps you build your credit history and helps you to build a good credit score. So when you open your bank apps, you're going to see what your credit score is. And then sometimes they'll tell you what to do to improve your credit. Sometimes when you're applying for credit too many times, for instance, you applied for a credit card this month. Next month, you applied to buy a phone on credit. Another month, you applied to buy a car on credit. Another month, you're buying things on credit. You are collecting another credit card. So when you consistently are seeking credit, then it's going to affect your credit score because at the end of the day, they will interpret it to mean that you are not financially stable, you're broke, and you cannot live, that the money you have is not sufficient for you, which is why you're always seeking credit. So that's going to affect your credit score. So you don't want that. You want to only use about 20 to 25% or maximum 30% of your credit limits in your credit cards. And then you make sure that you pay back before the timeline, before the deadline, so that you will continue to maintain a strong credit history. Also, if you're an immigrant in the UK, you need to register with the Electoral Commission. You need to be able to vote. So last year where we voted, there was an election, I voted. When your name is in the electoral register, it automatically builds your credit score. Yeah, so if you want to build your credit score, register to vote. Put your name and your current address in your area so that you can vote, because that helps build your credit score. Another way you can build your credit score is paying bills in your name. So you can pay council tax in your name. You can pay, electricity, gas bills in your name, because that means that, say you register for council tax or you register for TV license and you set it up on direct debit, and every month you are paying without fail. That builds trustworthiness. That shows that, you are reliable and you can be given credit. So it helps you, build a reasonable credit score. So avoid all these behaviors that, negatively impact your credit score, spending above your credit limit, not managing your credit allowance, and just overspending. Because at the end of the day, you're going to be shooting yourself in the foot. When you actually want a reasonable credit, maybe you want a mortgage to buy a house, you want a car finance, then you're going to see that your negative credit score is going to make it really difficult for you at the end of the day. If you have really high interest rates, then you're going to be paying too much money for a car, because if your credit score is low and they give you very high interest rates, then it's a disadvantage to you. So learn to actually manage your credit and have a good credit score, because it will save you in the long run. Another financial mistake that you're making in your 20s is actually staying in a low-paying job. Yes, I know that you may roll your eyes and say, oh, it's good. They said when we come out of school that we should get jobs that will give us experience. I know. But as you're getting the job that will give you experience, please get the bag as well. Get the money, because when you get a job and you do not negotiate the salary, you get a low-paying salary and you stay in that job for years. It's not going to help you financially, because you'll only be able to get to your financial freedom as much as you are able to earn a lot of income. Okay. So the more money you have, the more money you can save and invest, and the better life you will get. So first of all, when you get a new job and they offer you a salary, learn to negotiate your salary so you can get a higher pay. I've made a video about how to negotiate salary. So if you don't know how to do it, watch that video and learn, and make sure you practice it. Don't just learn and not practice. Learn and put it into practice. Okay. Now, staying in a low paying job for too long. Do you realize that if you change jobs, you have the potential to earn higher than if you stayed in one job? I'm not asking you to be hopping around jobs, but trust me, that increase that you're requesting for, that promotion you're requesting for, that your current employer has refused to give you, they will hire somebody from outside and pay them that amount of salary you're looking for. They will hire somebody from outside and pay them higher. So what are you going to do? You're also going to apply to a different company that will pay you higher. Exactly. If you have the skills, if you have the experience, and you believe that you should earn higher, and the company is not paying you high enough, or the company is not paying you as high, if you stay in a company and for the past 2 years you've been earning the same salary, what are you still doing there? Move. I'm serious. I'm actually serious. I have changed jobs. Let's say maybe I've changed jobs every 2 years. I'm not saying that you should do what I have, but this has increased my earning capacity, because every time I change jobs, of course, I'm not going to take the same pay. I'm always getting something higher. So imagine I stayed in my maybe first place of work for 5 years. Do you think that I'm going to be earning there what I'm currently earning? Please, if you have you can get a job for experience for maybe 1 year or 2 years maximum. If they're not paying you well, move. Get a better paying job. Because organizations usually, sometimes, some of these organizations don't really value their internal talent. It's more like see finish. They don't see you finish. So you ask for promotion, they won't give you, even though you are doing almost all the work. Move. Move and chase the bag. Follow the money. Follow the money, because the higher you earn, the higher your savings and your investment will be, and the faster you will get to your financial freedom and build wealth. And if you're in your 30s and you've been doing one job for 5 years and you look at your pay and it's nothing to write home about, or even if it's something to write home about, but you've been receiving almost the same pay for the past 3-4 years, even in this inflation, please move. Because if they don't want to pay you what you're asking for, somebody outside, another company will pay you. And I'm so sure that you'll be able to find that job that will pay you that amount that you want. Another mistake that people do in their 20s is falling for get rich quick scheme. If you're from Nigeria, there was a time, like when I was in Nigeria, there were times where so many get rich quick schemes were out there, gambling, Ponzi schemes, this kind of schemes that they'll say, bring 10,000 and bring 5 people that will bring 10,000. And then when you bring 5 people that will bring 10,000, you will earn 50,000. And then those 5 people will bring 10 people. I know you know what I'm saying. Don't pretend. You know what I'm talking about. Maybe you've even done it. Yes, have you not done it? Yeah, I've done it. Okay, I won't lie you. I think I've done it once or twice. But at that time, I didn't know the implications. I didn't know that it was called Ponzi schemes and that it's not like you're really making investments. They're just collecting people's money, collecting people's money, giving people. And then at the end of the day, when people stop putting money, then it crashes. Yes, all those get rich quick schemes, they are just gambling. They are not investment. They are Ponzi schemes. And if you keep falling for it and maybe you keep falling for it, you've lost money and you go back, you keep doing, a new one will come, you will join. A new one will come, you will join. You are not trying to build financial stability. You don't want to be grounded. You don't want to learn about investment. You don't want to learn about making good financial decisions. You are just running around chasing get rich quick schemes. It will not last. It will not last. And sometimes it will leave you more broke. So assuming that you're one of the first people that benefits from this get rich quick scheme, what are you using that money to do? Have you decided to invest that money? If you decide to invest that money or use it to buy a long-term investment, better, it's good. But do not just keep hopping on trends, get rich quick schemes, Ponzi schemes, and expect that you're going to get financial freedom from that. You're making a huge financial mistake. Ask people. There was a time they used to talk about MMM. I didn't do MMM. Maybe I was too. I didn't have money at that time. But I heard about MMM. People would put their money. They eventually lost their money. Go read about Ponzi scheme. So whenever somebody says, oh, come and pay 50,000, and then go look for 3 people that will pay 50,000. And then when you bring 3 people, you will get 150,000, blah, blah, blah. It's Ponzi scheme. It's not reliable. You might be lucky to get some money at the beginning, but you are robbing other people of their money, because somebody will eventually lose their money and will not make investments. Like somebody will eventually lose their money in the process of the Ponzi scheme, and maybe you're going to be benefiting from somebody's misfortune, which is not right. Put yourself in their shoes. If you're the person that is losing and the other person collected your money through the Ponzi scheme, would you be happy? It's like all these get rich quick schemes. Forex trading is good. It's an investment, but you need to know how to invest. You need to also know your limits, because people lose a lot of money in Forex trading. So all these quick investments that you want to invest today and reap 10 times tomorrow, I'm so sorry. It's a financial mistake you're making. And if you do not stop, the earlier you stop, the better. If you do not stop, it might cost you so much money in the future that you will not even know where to start. I know a friend of mine who gets involved in a lot of get rich quick schemes. And at the end of the day, she comes to me, oh, because I lost my money. What am I supposed to tell you? Anyways, that's another financial mistake that people make in their 20s. And if you're in your 30s and you're still making this mistake, stop it. Just stop it. Find something suitable, something reliable to invest in. Okay? Another financial mistake that people make in their 20s, oh my God, is not having insurance. I remember when I was in Nigeria, I enrolled in my workplace health insurance scheme. Okay? If you work for the government, you're likely going to be enrolled for the health insurance scheme that is being run by the government. But I work for a private company and I enrolled in health insurance. It was always deducted from my salary. So my employer paid a certain percentage and I paid a certain percentage, and it was deducted from my salary before tax. So it was deducted from my gross salary, which meant I was contributing less amount and I was being taxed less. So if your employer has this kind of options, or even if your employer does not have, but there are insurance companies out there, health insurance providers out there, HMOs out there that provide these things, it's better for you to buy health insurance and pay a meager sum every month, so that when you are unwell, you can go to the clinic and your health insurance covers the bills. Because imagine that you say you're earning, let's say you're in Nigeria, you're earning 500,000 every month, and then you fall ill and you go to the hospital and you have to spend 100,000 at a time. You didn't budget for that. So, but if you have insurance, health insurance, that you're maybe paying 5,000 or 10,000 or 15,000 every month, and then maybe you've not gone to the hospital in 3 months, and the 4th month you go to the hospital, the insurance will take care of it. And I usually advise people, when you're buying insurance, don't buy the basic policy. Always buy premium to cover you on every bit. Trust me, how much you're spending on insurance is very little as compared to how much you eventually spend if you have to pay with your money. I know how many times I used to go to the hospital when I was in Nigeria. I am AA. I used to have malaria every month. Imagine I had to pay with my salary, with my income, every time I went to the hospital. And the hospital was a private hospital that I used to go to. They are expensive. I was always able to go there every time I fall ill because I have health insurance. I wasn't paying for it. I was paying a meager sum for my insurance, and they were taking care of the bills, the hospital bills. So please, if you have access to insurance, do it. Please, if you live in the UK, of course, if you live in the UK, you can't walk around insurance because you need to pay for your health insurance, you need to pay for your car insurance and all of that. So this particular one is for people that are in countries that insurance is not a mandatory requirement. Do it for yourself. Do it for your future so that it will save you. You don't want to use all your savings to spend on hospital bills. Also buy health insurance for your parents if you can, because it is very, very good and it will save you in the long run. So avoid that mistake. Get your health insurance. At least health insurance and motor insurance is very, very important. Third party liability insurance for your car. Get it because it will save you. If you hit somebody, God forbid, or you bash somebody's car, you will not use your money to repair it because you have insurance. Another financial mistake that you're making in your 20s is living in an apartment that you cannot afford or buying a car that you cannot afford. So yes, you earn a certain amount of money and you feel like you can pay for it. Go back and sit and ask yourself, is this rent more than 30% of my earnings? If your monthly or annual rent is more than 30% of your income, you are living in an apartment that you cannot afford. If you're buying a car that you're paying through your nose, that because of that car is like this, your monthly car payment is hooking you, you're driving a car that you cannot afford. Because the moment you buy a car, it starts to depreciate. You can never sell a car for an amount that you bought it. I wanted to say because I sold my car, so I know what I'm talking about. So you better buy a car that when it breaks down, the parts that you need to buy and fix it is affordable. Don't go and buy a car that if something happens to the car, you need to use your 1 month salary to fix it. In fact, this one, I don't need to talk too much. You already understand. So if you're living in a house and you're paying rent in a house, that amount of rent you're paying is more than 30% of your either monthly or annual income. It is too much. You cannot afford it and it's a mistake. You're just putting yourself in a trap because that money that you're using to spend on rent, you could have used it to save and invest in your future. Okay? So if you read the financial books that I recommended in the other video, you will know what I'm talking about. So read those books and increase your financial literacy. Yeah, another mistake that I think you're making in your 20s is not enrolling in pension schemes. So for instance, if you're working for an employer and your employer has a pension scheme and it's optional, and you decide that you're not going to enroll in your pension scheme because I'm too young for that. Excuse me, you're not too young. I know that a lot of pension schemes, you can only get your money when you're 40 and above, some of them when you retire, but enroll in them because you're leaving money on the table. So let me give an instance. Some pension schemes, you will contribute 10% and your employer will contribute 8% from your gross salary. So they are going to deduct the pension amount or your pension contribution before your salary is taxed, which is a good thing because it means you're taking more money home. Now, when you contribute, say you're contributing 10% of your salary every month to pension schemes, your employer is going to add 8%, or depending on who your employer is, between 4% to 8%. They will match fund it for you. So if you deliberately withdraw yourself from the pension scheme in your organization, you are just leaving money on the table because that 8% that your employer is supposed to give, you're not going to get it. So I encourage people to do pensions. I know that it's a bit of struggle because, they are deducting your money, but they are deducting your money to keep for you. So I would highly, highly recommend that you enroll in pension schemes. And if you're in a workplace where your workplace has salary sacrifice for maybe a car salary sacrifice or healthcare salary sacrifice or any salary sacrifice at all of the service that you need, it's always better to enroll in them because they are going to make these deductions from the salary sacrifice before you are taxed, which means at the end of the day, you are being taxed less because they've deducted all those amounts and for your own benefits. So take advantage of pension schemes. Another financial mistake that you're making in your 20s is you're trying to keep up with the Joneses. You want to buy everything that is trending. You want to hold the latest phone. You want to buy the latest bag. You want to drive the latest car. I'm not saying you should not do any of those, please. However, if this is costing you financially, if this is preventing you from having enough money to save and invest, then you're doing yourself more harm than good. To be honest, I don't know why you're trying to keep up. If your circle of friends is influencing you negatively in such a way that you have to be spending all the money you have so that you can keep up with them, they are not the right circle of friends. I have friends that I don't need to have what they have. If they are earning more than me, why should I try to compete? Why should I try to have what they have? I go on social media and a tablet is trending. Samsung tablet is trending. Must you have the tablet? Must you buy it? A Pixel phone is trending. Must you have it? What are you using it to do? If you're trying to keep up with the Joneses, maybe your schoolmates, your work colleagues, then they're doing this, they're doing that, and you want to show off, you have the money as well. Think you're ever going to stop trying to keep up with people? Trends will never end. And Fashion will never end. They'll always come, go. Another one will come, go. Trends will always come and go. So if you're always trying to keep up with trends, keep up with the Joneses, oh, she's carrying this bag, I must buy my own. She's carrying this phone, I must buy my own. They go to party and they spray money, I must do my own. You're going for a wedding and you're spending more than the bride to look good to go for the wedding. You are doing yourself. Because at the end of the day, you're going to try to keep up, and people think you have the money when you don't actually have it. It's better for people to think you don't have the money and you actually have, than for them to think that you have the money and you don't have. Why are you trying to look rich when you are not? You think that being rich is about material possessions? No. So if all your wealth is in the things that you own, oh, your bags, your shoes, your gadgets, I'm so sorry for you, because you need to be able to build wealth that will last you a lifetime, that will last you to eternity. You need to build wealth, not last you to eternity. You need to build wealth that will last you for a long time, for 10, 20, 30 years. You should be striving towards retiring early by the amount of wealth that you have built. When you build a lot of investment, that those investments will now be paying you dividends such that you don't need to work to earn money, then you are on the right track. So I would recommend, instead of trying to keep up with the trends, keep up with the Joneses and chase after everything that comes out, why don't you invest that money so that in the long run you can decide to say, I'm tired of working. I think I want to retire. I want to just travel the world and I want to just do what I love without having to be afraid of the fact that, oh, I'm not being paid salary. If you have sufficient investments, your investments can be paying you dividends that you can live on them, which makes you retire early. Of course, but not the least point I'm going to be making in this video is you are making a financial mistake if you do not improve your financial literacy in your 20s, because life comes at you very fast. When you are in school or you're doing NYSC or you just started working and you don't have children yet, you have time in your hands. Use it to build your financial capacity. Read books, increase your knowledge on investments, on savings. What platform should you save? What platform should you invest? The video I talked about, I mentioned platforms that you should save and invest, and I also mentioned kinds of investment. When you have kids, you will not even have the time again. And before you know it, your finances are all over the place. So build your financial literacy in your 20s because it's going to help you in your 30s. I hope this video was helpful. If you have any questions, drop it in the comment section. And if you're watching this video and you have other points that you think you want to share that other people will benefit, feel free to drop it in the comment section. I will catch you guys in my next video.